Hello friends, this is the Cryptonian taking a look at Bitcoin, taking a look a little bit at the market, see what's kind of going on, get an overview. And we're going to be taking a look at another chart that's important. But before we get into that, Bitcoin is currently at 25,751, pretty much flat. We can see here that we're just going sideways. And that is because, well, yesterday was a holiday for the United States, right? The holiday is, or should I say, was Labor Day yesterday. And so the markets are closed on Labor Day holiday here in the United States. That being said, we can see over here the market's pretty much flat. We do have some altcoins that are picking up a little bit of a bid here between 1%, 2%. We can see that most of the altcoins are showing a little bit of upside momentum. Solana, we can see here Solana is catching a bid up 4%, 4.5%, still in a downtrend, but that seems to be in preparation possibly for what people think would be maybe a Bitcoin move higher here. And so the altcoins would move higher with that, but at a greater percentage, more volatility to the upside, which would be more profitable. That's a possible scenario. Or Bitcoin going sideways here would provide the opportunity for some of these altcoins to actually move and have a little bit of a run here. Remember the altcoins being very volatile. They move a little bit differently than Bitcoin. They have a lot more volatility, and when Bitcoin is pretty much flat or boring, not doing much, the altcoins then do tend to catch a bid, and usually it seems like there's more activity in the altcoins at that time, and hence more profits. Now here on Bitcoin, we see that we're still here going sideways right above the yellow line that I talked about, that critical yellow line, 24,950, 24,900, which is this yellow line here. And that being said, we just have to wait and see what the market does, whether we just go sideways here and then preparatory for a push higher. And I've said that before, that if we continue to go sideways here, we could have another impulse to the upside. If we fail to dump here, then obviously then the move is the greater chance to the upside. That being said, taking a look at CoinGecko has the market in broad overview. Taking a look at here, Bitcoin is pretty much flat. It's down 5.6% for the week. Pretty much flat. Ethereum down 4% for the week, and right now flat as well. BNB down 7% and currently flat, and XRP down 6.6%, currently flat. So as we scroll down, Cardano down 6.5% and currently flat. But here's an outlier here. Tonecoin up 12% for the week, currently is flat. For the day, down 6.4%. That's about 50% of what its move was. Still, Tonecoin is one to watch. Now, I'd be very careful. Tonecoin, say that fast 3 times. Tonecoin is the old Telegram coin, Gram, which was picked up and purchased, and they just call it the open coin now. It's a kind of an independent project, but it's been receiving a lot of activity as far as trader activity recently. And when you do look at the addresses are steadily increasing. So that being said, that's one to watch just because it has that pumpability aspect to it, right? Polkadot down 10%, Polygon down 7%, but is up 2.5% for the 24-hour period, Polygon. And so as you can see, it's just pretty much flat, right? Not much going on. Stellar, was moving earlier, but pretty much flat for the past few days. And everything else seems to be down. Hedera down almost 12%, being hit pretty hard. Internet Computer down 9%, being hit pretty hard for the week. And Filecoin down 7.5% for the week. So these are some tough numbers here, and it's a tough market, and it's all because of Bitcoin going sideways here. Bitcoin coming down, going sideways, not showing a lot of volatility or activity. And that being said, taking a look at the Banter Bubbles is pretty much showing the same thing. NEO up 12%. That's definitely one to watch. And that's one that pretty much stands out. Kava up 5%. Solana, like I said, Solana taking a small move, 5.5%, which is pretty much within range of it's not a deviation, right? It's not anything significant. STX 5%, Matic 2.5%, Ruin up 5%. So there you have it. Not much going on, but you can see that it does seem like there is some type of activity buying the dip on these altcoins. Okay. That being said, that could predispose the sentiment to a little bit more upside, and if that's the case, Bitcoin may or may not break that 24,900 level. But what I really wanted to talk to you about is this. I wanted to talk to you about the drivers of the market. Now I'm going to try to do this quickly. I don't want to make the video too long. The driver of the market is emotion. Okay. Now I know that there's a lot of people that would say, well, it's fundamentals. It's it's fundamentals. It's negative news, positive news that drives the market. In a way, you are correct. However, what is more accurate to say is that fear and greed run the market. And it's the headlines, the macro economic view, that run the emotions of those in the market. So you can see here, this is what's called the market cycle, right? This is the market cycle. You can see here, it's the Wall Street cheat sheet. Those of you that are new, you may not have seen this before. Those of you that are in the market, have been in the market for a while, you probably are aware of this. And this is the psychology of a market cycle. This is very important, and I suggest that you learn this, right? So basically what it starts out with, at the bottom of a cycle, is anger and depression because of all the losses in the market. That is the bottom, anger and depression. The new cycle starts with a little bit of hope. A recovery is possible when they see the price going up. And then disbelief. This rally will fail like all the others. Sound familiar? It continues to go up and climbs the wall of worry until you hit optimism. And then after you hit optimism, belief. Time to get fully invested. Time to get fully invested when honestly the move is halfway over at this time. Thrill. I will buy more on margin. Gotta tell everyone to buy this. This is amazing. This is going to the moon. And then after that, euphoria. I'm a genius. We're all going to be rich. Those of you in the market, does this sound familiar? Did you experience these emotions? I know most of you probably did. Even if you're aware of it, your emotions do have an effect on you. And even myself, I mean, you know, I go through these emotions even expecting them or being aware of them. The market does, whether you're aware of this cycle or not. It just, you get caught up in the hype, right? No one is immune. No one is immune. Emotions are a powerful driver of market behavior, and this you must learn. Okay? Fear and greed both run the market. Okay? And then euphoria is the top. And usually that's when the smart money, they call the smart money, the large hedge funds or the large whales, the large players, they exit the market. That starts bringing the market down. And then after there's a significant correction here, it pumps up a little bit. Complacency, we just need to cool off for the next rally. And so the expectation is, okay, this is just going to go sideways, cool off, and then we're going to continue. But that's not what happens. That's not what happens. What happens is we continue to go down. Now you're feeling anxious because you're seeing a significant portion of your profits evaporating, depending on when you entered the market. Now, hope, optimism, belief, thrill, euphoria, is that fear or is that greed? Is that fear or is that greed? That's greed, isn't is it not? Hope. Oh wow, I really hope that it's a recovery. I better buy, right? Greed. Fear of missing out. FOMO, you don't want to miss out. Optimism. This rally is real. Wow, okay, this is a real rally. We're going up. FOMO, don't want to miss out. Fear of missing out. I need to buy. Greed. Belief, thrill, euphoria. Euphoria, definitely greed. And a lot of those that are not familiar with the market, the newbies in the market, or what they call dumb money, and this is just a term that the smart money, Wall Street uses, and that's because they usually buy high or buy late, and they're buying off of the smart money, which bought down here at the low. Complacency, we just need to cool off for the next rally. Anxiety, why am I getting margin calls? This dip is taking longer than expected, right? Now you're feeling anxious. You're seeing your profits evaporate. You're getting margin calls to add more money to your position, or you're going to get liquidated. Denial, it continues to go down. Now you're in denial. My investments are great companies. They will come back. Now you realize that this is not just an ordinary dip. We're going down. There's a major change in the market structure. You have learned it or realized it too late, and now you're just in denial. You're like, well, I think that I made the right choices back here, and now I'm at a loss, perhaps a large loss, and I don't want to lose that, so I'm going to hang on to the losers and hope that they will come back. Panic. Everyone is selling. I need to get out. And that's when people start to sell for huge losses, and this is what leaves them sour on the market, just because they were not educated as to what the market cycle is. Capitulation, I'm getting 100% out of the market. I can't afford to lose more. And then they just sell all out. And then everything bottoms out. Okay? And then you start seeing smart money buy in again because this is the bottom. Anger. Who shorted the market? Why did the government allow this to happen? Sound familiar? You probably have seen, if you're paying attention, have seen a lot of these types of emotions in the market. What what are these emotions? Complacency, anxiety, denial, panic, anger? What does that remind you of? Fear. Fear. So on the upside, greed runs the market, and on the downside, the correction side, fear runs the market, right? The smart money buys down here at the bottom in preparation for the next large rally. And of course, the dumb money or the new money starts buying in way too late up here. Okay, not understanding the cycle. So when you look at the simplified market cycle here, you see it goes from the low to the peak to the next trough, which is the low, to the next peak, and it just continues to do this. The highest, or should I say the best time to buy, is down here at the low. That's quite obvious. Best time to sell is at the top up here. But you have to be aware of the market cycle. You have to be aware of the large picture, the big picture. And of course, depression, my retirement money is lost. How can we pay for all this new stuff? I'm an idiot. And then it goes back up into disbelief again. This is a sucker's rally. I don't believe it, right? Which then it starts to cycle all over again. Sound familiar? Well, it should. It should. If you've been in the market for a while, you probably experienced those emotions. Now, with that in mind, I want to show you, let me change over here real quick. One moment. Sorry about that. Okay. So let's change to the weekly, and you tell me what you see. Do you see anything familiar? Do you see anything similar? Let me show it to you again. Here's the market cycle. And here's Bitcoin on the weekly chart. Market cycle. Bitcoin on the weekly chart. So let's take a look. Here is your greed phase. Here's your euphoria phase, right? Comes down, goes right back up. People are hopeful, comes down, and they're like, okay, we're going to go right back up, make a new high again. Makes a lower high and then dumps. Okay. This is fear. And this is fear. You see it? This is greed on the way up, and this is fear on the way down. This here is the trough or the low point, and the same here. This is the trough or the low point. Okay. So now one thing to take a look at or to recognize here is from the structure. Now I'm going to introduce you into an idea. This video is pretty much just about the fear and greed. I wanted you to realize that the fear and greed and what it looks like as far as the emotional roller coaster and what it looks like as far as the structure of the market cycle. That being said, I'm going to introduce you to an idea. I'm not going to unpack it this video. I'll do it next time because the video is getting a little bit long, and I know that my friends like the shorter videos here. So this is a Elliott wave 1 impulse higher. This is a corrective Elliott wave 2. This is the biggest impulse wave 3, Elliott wave 3, corrective Elliott wave 4, impulse wave 5, and then of course corrective A down, B up, C all the way down to the bottom. And then what do you think happens again? We go right back into the 1, come down 2, and then the biggest of them is 3. So you want to catch the third wave. That's the biggest wave. Uh, Catch the third wave, which is the biggest wave, and then take some profits here as close to the top as you can. Again, this is not investment advice, but this is a general idea. And then possibly take the rest of your profits on wave 5, or if you're really good, you just take all your profits on wave 5. um, a lot of people, they get caught up in emotions, and it's hard to separate emotion from reality, and they make mistakes, and a lot of them end up selling here, um, etc. So, but one thing to look at is when you take a look at this Elliott wave 1, from the time it started, from the time it had its double top. Okay, this is a double top, by the way. Top 1, top 2. This is a double top, top 1, top 2. From that period of time till the time that it actually, just before it broke higher into the strong third wave higher, was 343 days. 343 days. You see that down here. Okay? And so what's interesting is I took that same measurement and I applied it to this second top here, and applying the 343 days brings us to June 10 of 2024. June 10 of 2024. Now, why would I look at it that way? Well, you see this here we have the big drop, right? Big drop here. And then we have a couple of pushes higher, and then we go into this really long boring part, and then from there we slowly climb out of it, right? This is called the creek. This is called the creek. On Elliott wave theory, this is called the creek, and this area is the sign, or the sign, or the evidence that all of the sellers have sold, and it's just kind of grinding down. There's maybe a few sellers here or there, but the majority of selling has taken place. The majority of buying has taken place, and so it's pretty much just dead, right? And so it goes into what's called this creek um, activity, which is it's kind of like a slow fade to the downside with very, very little activity. Very little activity because most people are out of the market. They're disgusted. They lost money. They're angry. And so you only have like day traders, short-term traders left, and they don't move the market like large players do. So that being said, we don't have the creek yet. We don't have the creek yet. You can see here that there is no creek period here. When you look at this, you can see this is the creek period right here. See how boring that is? The creek period. Or you can say pretty much all of this is the creek period. A little bit more volatile than what the chart shows, but rarely do you see price action mimicking exactly the chart. So there is a form of interpretation that you take. So what we could see, and I'm not dying on this hill. I'm just saying that what we could see is a long, boring, slow fade down like so, until we then start moving up into the next bona fide bull run, right? The next bull run that is without a doubt in process, right? So that is why I'm not in the market yet, because I know that the Elliott first wave, right, which is this, goes up and comes right back down to almost where it began. So as an investor, the best time to invest really is right before it breaks into the next run. That way you're not tying up your money in all of this long-term sideways price action. Now, if you are someone that wants the absolute best price and you're trying to get every penny out of it, then of course you would have wanted to purchase down in the 16, 17K area, where I do believe that is the bottom. I don't believe that we're going to see that bottom again, but I do believe that we could either go sideways here, or we could just have this creek, slow, low volatility grind to the downside, people losing interest. We could have that. However, there's one caveat, and this is what I've talked about the in previous videos, is that we're getting into Q4, and so we could have a drop here, but and some consolidation, which I hope we do. Then that would be my entry point. I'd love to get that as an entry point. Um, the Q4 before an election year is big. You know, the election year usually pushes the market higher, and we've discussed this in previous videos. So we may not see that boring creek activity. What we may see is just kind of like, if we hold this range, we could see this and then move higher, or we could see a breakdown and then a little bit of sideways action and then moving higher from there. Either way, I do believe that we're entering the period of time where purchasing is probably, if you haven't purchased by now, if you missed the bottom here, then this is probably scaling in over time as it drops lower. Averaging in is probably your best option. Not investment advice, by the way. We all need to do our own research, make our own financial decisions, and I'm just sharing with you a little bit of my experience in the market, and not only my experience but my perspective and my analysis. So that being said, I'll wrap up the video. I don't want to make this too long. I think you get the idea. The idea of the psychology of the market, which we could be probably around here, or we may even be, let's see, no, we would be here. So we're probably getting ready to go into this final stretch before the push higher, which again I've discussed, in previous videos, saying the summer is slow, summer's boring, and the September is not, historically has not been great. Out of 13, the last 13 months, 10 months has been a negative month. So could we get that last dip down? Could we get a dip below this 24,900 level into the golden pocket? It's very possible. And like I said, if that happens, I'm going to be buying, and I'm going to be holding for the next bull run to start in 2024, right? So that being said, I hope this is helpful, friends. I hope that you understand the market cycle. You can find this graphic on the internet. This graphic is very common all over the internet. And if you're not aware of it, I suggest that you Google the market cycle and you download this and you become acquainted with it, because knowing this cycle will help you know when that euphoria is kicking in and when to sell. Okay, and of course we'll cover all of that here on this. We'll cover all of that here on this channel. So thank you for watching, friends. I appreciate your time. I know your time is valuable and important, and I appreciate it. Um, Please, if you haven't subscribed and you feel that this information is useful, subscribe. That'd be great. Please give it a like. Giving a like on our videos is free, and it really helps us out. We're just starting. So thank you for your time. We will see you in the next one. I do believe that we're going to be seeing a big year next year. Take care.